Hello again. This is Carlos Scarpero, VA Mortgage Specialist with Ross Mortgage and Military Mortgage Bootcamp. Today I have a bone to pick with Mr. Dave Ramsey. For those of you that know who he is or don't know who he is a financial guru that gives financial advice. Before I go into my bone I pick with him, I want to tell you that there are some things that Dave does that I actually do like. He is really good at telling people to avoid debt, and certainly with regard to credit card debt, car loans, that sort of thing. He does give some sound personal advice. He also advocates that people should have an emergency fund, and I think that's good advice as well. Where I am really upset with him is where he's talking about VA loans specifically. On his website and on his blogs, on several occasions, he has said that a VA loan is a bad deal. Me as a VA loan originator, I'm very upset when I hear this because there are just a lot of untruths. And so I want to talk about one case I saw on his blog, and I'm going to tell you my disagreements with it. And so he's talked about VA loans several times, either through video or his blogs or his podcast. Since this one's actually in writing, it's much easier to look at it and also refute what he's claiming. So I'm going to pop over real quick, share my screen. In his Ask Dave column, he had a guy named Matthew. So the question was, Matthew and his wife are completely debt-free, and they are new parents. They built up $8,000 emergency savings, and he's active duty Air Force, which is great. They are renting and putting away 15% for retirement. He wants to take out a VA loan since they don't have a down payment for a house. Is that a good idea? Dave's answer is, a VA home loan is one of the most expensive kinds of loans. It's a veteran benefit, but it's not actually a benefit because you can get a conventional loan at less fees and lower interest rates. The only advantage of the VA house loan is you can put nothing down, which I don't consider an advantage. It's a trap. Save a good down payment instead of doing a VA mortgage. You've done a great job of getting out of debt, and you're investing well. Maybe you might consider stopping retirement contributions for a year to get your down payment together. You've got the itch to buy for a couple reasons. The baby's here, and you can see the light at the end of the tunnel as far as your military service goes. You had this emotional need to look at a house and say you own it. Oh my gosh, there's so much to talk about here in this. I want to talk a little about some things. I took some notes here, if you don't mind. So let's break this down. First of all, Dave, where is your NMLS number? Have you taken the test? Us here that are watching this as loan officers, we were like, okay, we had to spend a lot of time and take a test and figure all this stuff out. And Dave has done nothing. It's just a guy that talks on TV. Dave, do you study VA guidelines day in and day out? I don't think you do. So Dave speaks from ignorance in his response here. Let's take a look. The VA loan is one of the most expensive kind of loans? I don't think so. There are some misconception about the VA loan that it's expensive because of the funding fee. The funding fee is simply insurance. And, in the case of the active duty Air Force, he probably does have to pay 2.15, but we don't even know that because it's actually a lot cheaper than FHA insurance. It's still a great deal if you had to pay it. He very well may have a service-related disability we don't know about and have zero funding fee, which in case is a lot cheaper. So for the conventional loan, Dave's claim the conventional loan is cheaper. And so if someone does put down 20%, there might not be MI, there actually wouldn't be MI, but that doesn't make the interest rate cheaper. In most cases, the VA loan is actually a cheaper product there. So, and additionally, over 10 million veterans don't have to pay a funding fee at all. 10 million plus because of service-related disabilities. Closing costs. You completely missed the mark on closing costs here. Many lenders, including where I work, we waive all closing fees, all processing, all underwriting fees. So there's $1,500 in savings right there. Many title companies will waive fees, lower fees for VA loans. Again, he missed the mark. He says it's a trap. It's ridiculous. This guy's supposed to scrimp and save and do everything for years and years and do that to get his VA loan. Why? He says in the note he's in good financial position, which he is. He says he's got his emergency fund set, which he has. He says he's got some money going into his IRA, which he does. I think he's a pretty good physician personally. So let's break down the cost of waiting. I did an analysis on my website. Waiting just 2 years could cost over $8,000 in lost property appreciation and $7,000 in lost amortization. And so that would be, and that's based on a $200,000 purchase price, which is the average loan in America right now. So that would be over $15,000 in lost appreciation and amortization in just 2 years, just remaining 2 years. And I have a whole breakdown on my website at scarpero.com if you want to see it. That's insane. And a lot of markets even higher if your average purchase price is over $200,000. And that's also assuming there's no increase in interest rates. We're at record lows right now with interest rates. What if rates are higher in 2 years? Then you've lost even more. Crazy. So what should he do? Well, we don't know. Here's the thing. I have no clue about this guy's true financial picture. Neither does Dave. I mean, he talked to him for 30 seconds on some blog question. What are his goals? What are his income? What does credit look like? We have no idea. Does he think he's going to move soon? He says the Air Force. Is he going to retire in that same community? Well, we just don't know. What's his wife's situation? We don't know that either, do we? Is he eligible for service-related disability? We don't know that either. Here's the thing. Loan officers like us, we look at the entire picture. We don't look at 30 seconds of some crazy question. There's a lot of generalizations there. We just don't know. Is he ready? I don't know. I think he probably is, but I really don't know. And Dave doesn't know either. So please, before you start using financial gurus for your questions and your answers, really talk to an expert, try to figure out what you're doing. My name is Carlos Scarpero. I'm licensed in Ohio, Kentucky, and Michigan. I can be reached at scarpero.com, scarpero.com. My number is 937-572-3713. If you are in Ohio, Kentucky, and Michigan, I'd love to talk to you. I am connected with loan officers all around the country, so if you're not in those areas, I'd still want to talk to you. So please reach out and let's talk. Thank you.